Welcome to the Southern Maryland MarketWatch, brought to you by RBI, Real Estate Business Intelligence, an MRIS company. We're going to dig into the most recent numbers from the Southern Maryland housing market, which includes the counties of Calvert, Charles, and St. Mary's. Let's jump right in. Economic recovery loses steam. Housing demand in a slump. Tax credit leaves mess in its wake. We're bombarded with headlines like these every single day. Some have merit, some don't. The truth is, the economy is currently driving the housing market and not vice versa. In their latest effort to combat sweeping national trends, local pending sales posted a less than ideal, but still not as bad as the rest of the country, 5.7% dip since July 2009 to land at 328 purchase agreements signed. Many regions across the country are suffering from 40% declines in buyer activity, but not here. It seems that such a serious decline wasn't on the menu for July and indicates we have a much shorter path to positive gains than other regions. Since buyer activity thankfully outpaced seller activity, inventory levels decreased by 3.4% as active listings stepped down to 2,998 units. Prices weren't quite as lucky, which likely reflects the mix of homes that closed during the month, for instance, good bargains at the lower middle price points. The July median sales price of $266,000 was a 6.7% decrease from last year at this time. Expect the market to return to its ascent in the coming months, assuming buyer activity is revived and current inventory is at least partially absorbed. Negotiations continue to move back toward the seller's favor, albeit quite hesitantly. The July percent of original list price received at sale increased a slight 0.2% to land at 93.2% of original list price. Typically, the housing sector generates a number of corresponding construction, manufacturing, and other skilled labor jobs, which in turn fuels economic growth. These jobs then return the favor by lowering unemployment and creating new demand for housing. And then there is now. Job churn simply must fill the demand gap formed by the tax credit before buyer activity returns to the market. The Fed's August 10th announcement that it will be purchasing Treasury bonds is a clear indication it wants to maintain interest rates at historic lows, an important driver of purchase activity moving forward. To sum up, the housing market is really trying to hold its ground until the job situation improves. Only after widespread private sector hiring will demand be restored to the market and prices continue to stabilize. Until then, it's a hurry up and wait game. That's the Southern Maryland Region Market Watch for this month. Tune in next month for the latest.